There are bullish signs moving ahead in Bitcoin and also in cryptocurrency, and I think there are some things that we are going to look at today that could point in the right direction for where Bitcoin might be falling in February. My name is Paul Barron. Welcome back to Tech Path. Let's get into it today, and really it's kind of a rundown of an array of strategies, news, and things that are happening within the crypto sphere that I believe are very bullish in terms of signals that are pointing in the right direction. And usually when we see bullish signals like this, especially happening in the number of fronts that we see, it usually means positive things for Bitcoin are about to happen. I just want to first jump to this first story. Is Coinbase and Mastercard are partnering to revolutionize NFT purchase experience. This is a big thing because I think what we'll continue to see is lowering the cost and also the onboard for NFTs. Now, why is that important for crypto in general? As we see onboarding and also adoption starting to move up, especially at Coinbase. Remember, Coinbase being the largest US cryptocurrency trading platform. When we see these kinds of moves, this starts to normalize the use case for some of these outer layer projects, including altcoins, NFTs. Then we'll see, of course, the potential for Metaverse and gaming. All of that is leaning in to what they're talking. So if Coinbase recently announced here, right here, the Coinbase NFT peer-to-peer marketplace that will be making minting, purchasing, showcasing, and discovering NFTs easier. That's the big key here, easier. Thanks to our work with Mastercard, we'll be able to provide a better customer experience on Coinbase NFT and plan on working to find ways to bring this opportunity to the broader ecosystem through Mastercard's scale and global network. So this tells me that they are looking at trying to utilize the massive database of Mastercard and integrating this all into what could be happening in the NFT space. And of course, this just points to the right direction of where it's all going. Because if you look at MoonPay, which is one of the big areas that I think is, I don't want to knock on what MoonPay is doing, but they're one of the big problems of being able to onboard utilizing credit cards, and that has been the biggest issue. MoonPay's transaction fees start at 4.5% right here, and 1% for bank transfers. Then you've got your gas fees, etc. And you can kind of see this is the problem that we continue to see with these kinds of scenarios with credit card onboarding or fiat on-ramps that are just too expensive and or too cumbersome for the average user to get into. And I think that's why the partnership with Coinbase and Mastercard are a big deal. The other thing is OpenSea fees. This is the other one. Now they're taking 2.5% of every transaction, and you can also look at what could be a continuation of more rising fees on OpenSea. And if that continues to be the case, and we see what's happening over here with Coinbase, FTX, many of these exchanges now that are starting to move into the NFT application space. Remember, you don't have to move off your exchange now to go and participate in the NFT marketplaces. So that in itself could really spin kind of a different story for for OpenSea and where that might be going for their future. If we continue to see Coinbase, FTX, and many of the other big titans, Crypto.com would be the next one. And I think this will be a big issue in 2022. But the good thing is it's leaning in to normalizing the use case for these things in cryptocurrency. And that's the bullish signal that I want to continue to kind of play in on. The other bullish signal is this one right here, and that is Animoca Brands raises another $358 million at over a $5 billion valuation to grow the open metaverse. Now, everybody's kind of saying, well, Paul, hey, the metaverse is still a few years off and it's going to take some time. I get that, and I do understand that, but the point is there are a lot of companies that are building up, one, their treasuries, two, their development architectures and the brands in which they're building to be able to get companies in the position to make it into the metaverse and really start to see a big switch of where this can really go for cryptocurrency. Play to Earn Gaming is going to benefit from this, as well as altcoin and all the infrastructure of many of the projects, layer 2s, etc., that all apply to how we're going to see transactions occur in the metaverse. Again, Animoca Brands, $358 million. That's not a drop in the bucket, but what's more important here is that we're seeing this around the industry. This year, I think we will see we could see upwards of $500 million really moving into the space just in a very short period of time in the first quarter. We could see movement of somewhere in the range of $1 to $2 trillion moving in an investment throughout 2022. So a lot happening around that space. Now you've got Cryptocom, which is dropping in their first venture arm at $500 million. $300 million addition is expected to put in an equal footing in other exchange venture operations. The one they're targeting, of course, is Binance Labs, and what Binance has been able to do from the early stage and seed level developers that are essentially launching in many of those kind of platforms. Many of these exchanges have and understand that the pipeline for new projects and the pipeline for projects into investment strategies for average traders is a very key component. But even more so with Crypto.com, the fact that they're moving $500 million into the space of what we're going to see in terms of new evolution around new projects, this is another bullish sign that's pointing to everybody's leaning in on where cryptocurrency is going. And that's the thing that you have to kind of understand, whether you're an investor, whether you're an analyst, you're looking at whether or not all these things are pushing the envelope forward. Industries that are starting to recoil are not making these kinds of investments. They see the writing on the wall, whether it's in DeFi, whether we see regulation start to move into the space. All of this starts to point in the right direction. So I'm very, very bullish on these moves. Another one right here, of course, is Encore Games. Excited to partner again with the best in the industry, Animoca Brands, Galaxy.gg, and then of course Polygon and HyperEdge Capital to build the next range of products. Again, this is just another sign of how much we're seeing activity moving in the space, and it's becoming mainstream technology activity. And what I mean by that is in Silicon Valley, all these investors are looking for that next layer of innovation that is occurring. It's happening in blockchain. Everybody in Silicon Valley that I talk to quite a bit are all indicating blockchain is the future. We are going to see this happen. It is a real thing. It's kind of like the conversations I was having in the mid-90s when everybody was pointing to social media and said, listen, social is really going to become something. We're going to see a whole array of companies, including different platforms, different kinds of engines, data systems. All these things would eventually blow up, and sure enough, that is exactly what happened. That's exactly the same kind of scenario we're seeing over here with blockchain. The other thing that I'm looking into is where we're seeing these not different but unusual approaches to old school. And one of them is DAOs suddenly leaping into Wyoming real estate. Now, Wyoming, if you don't know, it's a state that has very pro-crypto laws. They have one of the most, I think, progressive crypto legislators out there with Ms. Lummis, and really kind of the evolution of what Wyoming has been trying to do in terms of being able to set up crypto entities. And remember, there's places all around the world, but not in the United States just yet, in terms of crypto havens. And what I mean by that is for developers, projects like this, where you've got DAOs that are now looking to go into and starting to work within the real estate industry. This is where it starts to show, again, another crack into one of the old school and traditional investment classes being real estate. If real estate starts to see more and more crypto activity, whether it's through DAOs or other things like that, again, these are, again, very heavy and bullish signs to what we're going to see moving forward. The other thing is you've got, I think, what has become a little bit of the one Superman proponent for Bitcoin and also cryptocurrency, and that's Jack Dorsey. Jack Dorsey went into a little bit of a clash right now and puts crypto at the crossroads of this. And basically what the debate was is, and this is a very interesting debate, it's one that I've had with a few people, is that Web 2 and Web 3 are really a transition and a handoff into the next evolution. It's the next era of where internet and what we will know as digital ecosystems will transact. Dorsey sees this. That's why he left Twitter. I truly believe that he is in and on a mission now that is completely different and maybe at its core of what he did when he tried to start Twitter. And I think with what Jack is trying to say is that with so much VC involvement, and what they're saying here with Andreessen Horowitz, which was blocked by Dorsey, I'm officially banned from Web3, Dorsey said in a tweet that showed a screenshot of Andreessen's block. Mainly it was all about Chris Dixon, who is the lead for Andreessen Horowitz crypto team. Mainly what he's saying is that too much VC control is starting to seep into the crypto space, and that could be a bad thing. The fact that you've got someone like Jack Dorsey who's looking at this and saying, wait a minute, this needs to be decentralized. Remember, this is a play that has been done before. If you think about Twitter and its decentralized model of what it was trying to do, if many of you may not know this, but Twitter originally was started as an RSS feed and was built on a project called Odeo. Odeo was a pure RSS play. The problem was RSS could not, remember, RSS runs podcasts, RSS could not handle the flow of data. Remember the fail whales and all of what we saw on Twitter? All of that was the idea of decentralized media, decentralized social media. Now you see servers like Mastodon and all those kind of things that are happening in social media, and I think that's where Dorsey's going with this, is that decentralized is the model, and we need to keep it that way with the idea of VCs coming into the space, less decentralization. So I think he's trying to defend the industry in this movement. The other thing is you've got Intel now moving into Bitcoin mining. Their Bonanza mine, which is a chip coming up, they just released talking about going into potentially the hardware business, but not with its new upcoming GPUs. This is potentially going to be a new best and brightest minds in the chip industry launching potentially a new chip release that would be geared for essentially a low voltage, energy efficient Bitcoin mining ASIC machine. So again, this gets into technology that is moving in the right direction. So you've got legislation, moves on NFTs, big proponents shifting around, investment in the class moving dramatically, then shifting over traditional asset classes, and now technology continuing to move in this direction. Too many things, too many dominoes are dropping into this direction, and that to me is continued push on where this goes. And I want to kind of end it up with a couple of things here. Cynthia Lummis, which of course is a Republican from Wyoming, nickname for her favorite cryptocurrency is freedom money. She says a Bitcoin, which she holds in the tune of about $250,000. It's freedom money if you're a libertarian, if you're a progressive. Basically, she's saying this worked for everybody. And I think with her position and what she's trying to do in and around the legislative front, we could see some things start to break loose in 2022. That to me is a big deal. Don't forget Dapper Labs, their positioning from a lobbyist position is going to start to see, and I think we'll see more and more companies within the cryptocurrency space start to trickle in to DC, and we'll see a lot more of this start to move around. Lastly is USDC flipping Tether on Ethereum. This is a good thing in the sense that USDC is really moved along in the way of a true monetary system, and just some things that they point out here. Major milestones surpassing Tether USDT on total supply of the Ethereum network. Current supply on Ethereum as of writing 40 billion tokens, just ahead of USDT's supply of 39 billion. So it's right there on top of Ethereum. And doubts over Tether backing has caused a little bit of a public image to decline over the years, and I think that's where USDC and Circle are trying to play into this. But again, if I put my conspiracy hat on, I always think that maybe Circle and USDC is positioning for some sort of digital currency or central bank digital currency. It just seems like a lot of things are playing into the function. But now that could be a good thing for what we could see in terms of cryptocurrency in general. All right, I know you guys are wanting to take a look at the Bitcoin chart, so we'll end up on that. And before we do that, I want to show you guys, of course, if you have not joined in over on our Paul Bear Network website, just go to paulbearnetwork.com. One thing we do over there is our Crypto Power Index. This is essentially what I'm getting ready to show you and what we do in terms of analyzing the sentiment and also amplification. We've got a new tool where you'll be able to track all the different categories. So we've got the overall, if I just hover over overall sentiment right now, you'll see the overall sentiment of all cryptocurrencies that are in our index. And as you can kind of see, it's kind of been moving down. This is a weekly update, but you'll notice there that it's starting to trend up. If I hover over Bitcoin, again, I'm seeing a little bit of a trend up after a fairly significant sentiment flow down. There's ETH right there. hovering in, and also a little bit more flat. So something to pay attention to. And then here's all of the altcoins. So all of these have been trending up with a little bit of dips that we've seen in the last 6 to 8 week run. And then of course, Metaverse and gaming, huge run, big dip. And then now we're starting to see somewhat of a little bit of a recovery. And then here's DeFi, which has been almost flat most of the year with the exception of about 6 to 8 weeks ago where we did see some movement. What we're doing is tracking, right now I think it's around 9,000 different projects in the CPI that are accumulated into our sentiment tracking tool that basically looks at overall sentiment and then individual project sentiment. And that's how we lay this in. If you want to get access to this, you're going to get access to this just by joining over on Paul Bear Network and get into something that is called the Diamond Circle. It's real simple. You're going to have things like our digital asset rewards. It's our members only content, discounted courses, and then Diamond Circle email. It's real simple. Just fill out that form right there and you're in. And that's the cool part. Plus you'll get a chance to get into a lot more of our insider data and stuff that we do there. Let's jump over to the chart real quick. And this is really what I'm talking about because this is where we lay in our indices across what's happening in Bitcoin. And the last sentiment we pulled was right here on January 10th, where we had a 70, and this is on Bitcoin, 70.05, and an amplification score of 69.28, which is usually pretty positive. And I want to kind of just zoom up a little bit on what's happening right here in this space. Now, one thing that is interesting about when we measure sentiment is we're always looking for these dropouts or data that starts to push. And as you can see, we kind of missed this little bit, but I think what happened was this little bit of overperformance right here outside of our indice, and then this drop was essentially what our data was measuring. Is if you look at that drop right there, and I'll go to this from the high to that drop right there, was that 7% move that we saw within about a 2-day run right there. So I think that we are on the right track here with where sentiment has been holding on Bitcoin. And if you look at some of where the performance has been over the last couple of weeks, you'll start to see a channel developing and our sentiment data is layering up right there in it. Now our high is still pointing at end of January, could be around 46.8. But if I run this out and I go into February, if we stay in this roll, we could see the $50,000 Bitcoin in February, maybe a $55,000 Bitcoin if this trend continues to go in that direction. The question will be right now is we're seeing a little bit of movement right here in the channel that we're currently tracking. We are going to pull a new sentiment data point right here as of today, which will start to recast where this potentially can go because we'll adjust that as we get new data and we move into this. Again, this is all CPI. And if you look back at the performance of Bitcoin over time, you can kind of see just the historical of what we're picking up on both sentiment, and we've been fairly well on it, out a little bit here overperforming, a little bit here underperforming, went out of our sentiment data there, kind of right there on the skirting there, and then this little bit of a bubble that we missed right there. But so far we've been fairly accurate with these in moving in this right direction. I think Bitcoin could be on its way here for a nice little recovery. Problem I see is that we could also see a little bit of a correction around 42K. Now, could it drop in below this if we start to see some negative or some FUD start to move in the market? That's when sentiment can get affected pretty quickly. So we always keep an eye on those as we go. We'll make sure and keep you guys tuned up on this. And again, as I said, just join the Diamond Circle because we're going to drop these kind of things all the time. Click the link below to do that. Of course, if you want to reach me, it's out on Twitter @PaulBaron. We'll catch you next time right here on TechPath.